Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, it's a pleasure to be back, and thank you to everyone listening in.
Ted, is this the time to buy into the Canadian market?
Well, 2 weeks ago, we wrote a piece about the outlook for the Canadian market based off of our insider signals, and we titled it, buy the Canadian dip, basically. And why was that? Well, because insiders were continuing to be bullish, and that is despite our Canadian Insider Index hitting new all-time highs. And the idea of buying the dip, is now come to Canada. I mean, you used to hear about it in the United States, in the U.S. market all the time. Well, if you've been buying the Facebook dips, I haven't checked Facebook stock recently, but, that's a trade that worked for, a decade. Well, maybe it's time to move on to a different trade and come look north here into Canada, where the Canadian Insider Index, has been making new all-time highs and has made another all-time high on Tuesday. Year to date, it is now up about 31% year to date, so that's pretty good. And the insider sentiment is still pretty bullish. So we would suggest that for those who have the risk tolerances for Canadian stocks, and particularly junior stocks, to look at them. We really believe that this is the time for the Canadian market, and we've been talking about this for some time. It's being led by energy. Just before I came for the interview here, Jim, I checked. We over the summer in our morning reports we highlighted more than a dozen energy stocks. Okay, this was before now everyone's talking about energy today, and oil is going to go to 100. I think on our show a few months ago, I talked about the outlook for oil. So, and it was pretty upbeat, and here we are, and now everyone's talking about it. Well, we were talking about it this summer. And if for those who are not members of our community, you can go to our Inc. Research Twitter feed. It's INK Research, where I've been putting most of our 3-minute video summaries up there. Unless the stock is particularly small, we leave the summaries up there, so you can take a look at some of the energy names that we've been highlighting over the summer. And they've all had double-digit moves, not surprisingly. And now we're looking at some other, other other areas of the market that aren't quite as loved, that aren't quite getting the headlines, that are still getting a lot of, hate from some corners of the market. Of course, that would be crypto and Bitcoin. So, that's kind of a more interesting area for us right now in terms of uncovering some opportunities that maybe a lot of people haven't, aren't really focusing on. Now all the mainstream media, they're all focused on energy. Well, I think if you don't have any energy exposure, we had this pullback in the summer. I don't know when the next pullback's going to be. We had a major one in the summer. We wrote about it and saying, it's summer buying opportunity. So that opportunity has sort of come and gone, and it'll probably be back though, but we'll have to see on the next sort of major energy pullback if it's like more of a cyclical, longer-term trend. I don't know how long this energy run is going to go. I don't know, without another kind of pullback, meaningful pullback. I have no idea. All I know is the Canadian market is looking good to us and continues to look good to us. And, we're into buying the dips.
Cryptos, Bitcoin, so many warnings about them. China now banning cryptocurrencies. The U.S. seems to be taking a different attitude. Can you tell us about it?
Well, first, just let me say on the China ban, they're banning a lot of cryptocurrency services. They are not banning holding cryptocurrencies, and they are particularly not banning the renminbi, central bank digital currency. They're very much on the move to promote that, and I'll just get to that in a second. But in our last interview, Jim, we talked about three risks to the crypto market. One was Gary Gensler, who was actually speaking that day, and he laid out a very hostile approach. So the SEC is pounding its chest and taking a very hostile approach to crypto. Okay, but most of the cryptocurrencies bounced after that, and I think the school of thought is, okay, that's the SEC's negotiating position. So that seems to be the thinking in the market, that yes, they're talking a tough game, and they can play a tough game. There's no doubt about it. But at the end of the day, they're going to come to some kind of resolution. We'll see. But the crypto market now has heard him. Crypto investors have heard him, and now they're thinking, okay, now are you going to approve those Bitcoin ETFs, Gary? Because it's kind of your job to do that. Are you going to approve them? So now there's a bit of bullish, some bullish factors that are coming into play on the SEC risk. On the China risk, they came out and they laid their cards on the table. Hooray, we know where China stands. Basically, they don't want any competition for their digital currency. And that's fine. China can do what they deem as in their own interest. The rest of the world will carry on. Little countries like El Salvador, who the mainstream media wrote off as, doing this horrible thing, going into Bitcoin. Well, apparently, according to the Coin Bureau and in their latest weekly update, which is available on Canadian Insider from Monday, half the adult population, eligible population, have downloaded the Bitcoin wallet in El Salvador. You don't hear a lot about that in the mainstream media. They don't want to talk about Bitcoin successes. They only want to talk about terrorism, ransomware, all those things. That they like talking about that. They don't like talking about, well, there's more people now with Bitcoin wallets, I believe, in El Salvador and with bank accounts. They don't want to talk about that, right? If that is not exactly the case, that is the trend, and I believe that is the case. But people can check that for themselves. But the trend, the fact of the matter is, the Bitcoin adoption in El Salvador is looking pretty good. Okay, but China doesn't want that kind of competition. They want everything for their digital currency. And that gets to the third risk that we talked about. And that was, what is the Fed going to do about stable coins? Okay, now just a quick briefing, a summary for your audience who may not be so familiar with stable coins. Basically, for the most part, these are cryptocurrencies that attempt to track the U.S. dollar on a one-for-one basis. So it's kind of like a digital money market fund, and there's different ways that they're structured. And now the Treasury and the Fed are saying, well, we better figure out how to regulate these and how to deal with these, because now they're getting bigger and bigger. We could ignore them for a while, but now they're so big. So I think in the summer they were thinking, well, we're going to come out and we're going to bring the hammer down, and we're just going to try and squish them. I think that was probably the default position. But then China started breaking out its plans for its digital renminbi, and I think the lights went on at the Treasury and the Fed going, oh, wait a minute, this is China's strategy to compete with us on a global reserve currency basis. Well, we better just hold on here, and we better think about this. So as we wrote to our clients, I believe it was last week in our market report, that it was 2 weeks ago in the right after, actually, the report that came out right after our interview, that look, the Treasury's going to probably have to take its time here, and the Fed to think this through. Because if they make a mistake and they open up a big opening for China to start using its stable coin in the global payment rails, it's a game changer. So the U.S. has to get it right, and they've been kind of the Treasury and the Fed have been asleep at the switch while China's been building this, building the what do we call it? Building the aircraft carrier, right? The monetary aircraft carrier is going to be the national stable coin of China versus the national stable coin of the United States. And I think the Treasury in the U.S. have to decide, do they want a central bank digital currency? Because that has huge implications for the Jamie Dimons of the world, who, you don't have to Google very far to find out his view on Bitcoin. But if the Fed were to start issuing its own stable coin, well, that's going to impact the big money center banks a lot. Or do they go with private stable coins that are regulated like banks? And I think that's what they're getting their head around right now. So the bottom line is, I think the changing circumstances are quite bullish for stable coins on par. Some of them will probably get hit, but I just don't think that it's the type of negative potential shock to the cryptocurrency ecosystem that it would have been in the summer. So things have improved quite a bit on the regulatory landscape since the last time we talked. So, I would encourage your members for those who can join our community, you can stay on top of our reports, and we do update things. You are, welcome to listen, of course, to House Street when we do these interviews. But circumstances are changing, particularly in the crypto space, quite quickly, and we do try to stay on top of them. Just as they can change at the Fed, they can, in terms of the broad market and in the junior market. But crypto has definitely had some, there's been some major developments. There will be major developments coming. Things are looking much better now than they were 2 weeks ago. And I think at the time I suggested that, things could change as quickly as a week, and so they have. And they could change again in another week. I mean, you could have the SEC come out with a slew of lawsuits, and that wouldn't be so good for the current, crypto bounce here that we've got. So there's all sorts of possibilities, and we're going to keep on top of them because we continue to believe that the cryptocurrencies are going to redefine the financial system. They're going to redefine our business at Inc. Research. I put out a piece in our newsletter over the weekend, our meta map, so those who are interested in kind of our thoughts and where we have to take Inc. Research, you can take a look at that. That's available on Canadian Insider as well. So exciting times, and that's just in crypto. Never mind what's going on in the global oil market. So it's a great time, I think, now to be investing in the Canadian market. If you're still playing the big cap tech names in the U.S., then it's kind of like role reversal. Welcome to what we face in the Canadian market for the last decade. Although I don't wish them that kind of a prolonged period of agony that we had to go through. But there are some challenging times in the U.S. tech space right now, for sure.
Europe's having an energy crisis. Any chances that might happen here?
Well, you never say never, but fortunately, we just haven't had the same ridiculous policy choices here that they have in Europe. Things like, we can't have nuclear energy. That's a bad thing. Okay. How's that working out for you? So it's, we're blessed here with abundant resources, and fortunately, we haven't made a huge amount of policy errors in Canada. And that's partly because the provinces have such, have a constitutional, oversight of resources. So there's only, no matter how hard the federal government would have wanted to, and they didn't try too hard, to clamp down on the energy sector. They weren't friendly to it by any stretch, but we didn't have the kind of animosity we saw back in the 70s. But, Ottawa has been no help to the energy sector, that's for sure, over the past few years at all. They have not been a positive force, but they could have been a lot worse. And that's not saying much, but, I think compared to the situation in the United States, even Canada's looking pretty good. These Canadian oil and gas stocks are on fire for a reason, and that is because we have the way our constitution set up. The provinces have been able to keep the oil patch alive during these tough times. And for example, Alberta and I believe BC, they've got very flexible royalty structures so that in hard times, the governments aren't grabbing as much. In better times, they take more. So that's worked out well for the Canadian energy patch. And I think we have to give ourselves a pat on the back when we get some policies right. Now, the next challenge for the energy, well, not just for the energy patch, I think for all of society, is what role does the oil patch play in dealing with climate change? And now, whether you believe in climate change or you don't believe in climate change, the fact is that policymakers are doing something about it. They're not doing it very effectively, but they at least want to be seen to be doing something about it. Do we get off this mantra that we have to stop, producing fossil fuels? Because it's not, it's just not happening. People aren't going to, electric cars are coming, but they're not here tomorrow. And, it's going to take a decade plus to do a motor vehicle transition, maybe 2 decades. So we're going to continue to need fossil fuels, and the politicians are going to have to come clean with people. We've talked about this on the show as well. So no, it is a great time for the Canadian oil patch. We'll see. I mean, if you had a global economic slowdown, that would be a problem. And we do know that China is slowing because of some policy decisions it's made. But look at the oil price, and a lot of that comes back to the Fed. The Fed is at zero interest rates. That's important because it allows for people to take speculative positions in the oil market, build up inventories. It doesn't cost much. So on the financing side. So the Fed is helping to keep oil prices high, and this is, of course, the environmentalists never talk about the role the Fed and the Bank of Canada have in promoting climate change. All they want to talk about is Exxon, right? And on big oil. They don't want to talk about big central banks because that would get into government planning, and the environmental lobby tends to favor government planning, and they don't like to talk about it when the government planners are actually the big drivers behind climate change. I mean, Christine Lagarde is one of the world's biggest promoters of global emissions because she is keeping rates at negative. She is bringing forward consumption from years in the future. She is driving climate change in Europe. You've got bad policies in Europe. Europe is a climate mess. It is an energy mess. And, maybe some politicians there will rise to the occasion and straighten things out for them. We can only hope so for the good of their citizens.
We'll have more with Ted Dixon right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, is this the time to get into risky stocks? Because it seems the stock market is a little less than totally stable right now.
Yeah, so that was our market report that we put out on Monday. And basically, this is we want to take a look at the venture area, the junior area of the market, and insider sentiment is the highest it's been since sort of the June 2020. And, it's basically a contrarian view that, everyone's now sort of panicking about the debt ceiling and China's slowing down. The Fed's going to taper. Well, so this is your wall of worry for for contrarians who have high risk tolerances. And, what basically we're seeing is insiders are upbeat, and it's across the whole junior spectrum. It's not just in mining. It's also in oil and gas. It's also in crypto equities. It's also in healthcare. So we're seeing a broad, across the board, upbeat view of insiders in the riskiest parts of the market. Fed is going to stay at zero. So that's a green light for those who have high risk tolerances. If you don't have a high risk tolerance, you should never be in the risky side of the market. Now, I don't know what you do when the Fed is at zero, the ECB is at negative, the Bank of Japan's at negative, they're pushing everyone into risky assets, but you probably, you don't go into the most riskiest, and so that's the sort of these venture junior stocks are not for you. So, and everyone has to, obviously consult their own financial advisor to see which investments are appropriate for their own personal circumstances. But for those who do have high risk tolerances, the insiders are signaling, here's your chance. So you don't want to chase these names. You don't want to, you don't want to play the fear of missing out game. You want to play the ugly duckling game, right? You want to look at the ones that aren't being loved. That's why we're more interested right now in some of these crypto equities that are still hated by a lot of corners of the market, and we think there's still some opportunities there. And we will have to see, though. It's risky again, as we mentioned at the beginning of the earlier on. There's all sorts of lightning bolts. Risk lightning bolts that can hit the crypto market at any given time and send Bitcoin down 10% and altcoins down 20% in a trading session. So, that's the type of market you're dealing with. But on the other hand, Bitcoin is basically the best performing asset of all time. So for all the times you hear in the media, well, don't touch Bitcoin, it's an awful investment. Well, what's the basis for that? I mean, it is very risky. So, it's a very risky investment. I would agree with that. But, to dismiss the whole cryptocurrency area because of whatever your view is, you think it uses up too much energy, it does, it doesn't have any intrinsic value, okay. Those are, I think, all arguments that really don't hold much water. And, obviously some cryptocurrencies will not survive. Some use case, because there's a competition going on amongst cryptocurrencies for adoption. And this is what's happening now. And that's why it's such an exciting time in the cryptocurrency space. And, these lightning bolts of risk actually provide, I think, buying opportunities. Now we'll have to see if long bond yields start to really go up. In that case, I think you really have to favor across, and this is not just in crypto, but in across the market. If the long bond yields really start to move up, then you really have to look at what we would call sort of short duration assets. Those are those assets which aren't dependent on long-term time horizons. So you want to look at investments that have short-term time horizons. That's why oil and gas tend to do very well in those environments. If you have low short-term interest rates and rising high long-term interest rates, because you're getting the oil and gas out of the ground right away. It's going to market right away, and it's why technology stocks, for some reason, for part of the reason why technology stocks that are still working on building markets, 5 years into the future, well, those cash flows are more distant, are more risky. In that kind of market environment, you want those investments that don't depend on those long-term plans. Bitcoin, amongst all the cryptos, is probably, I would say, the closest to sort of a currency, sort of the short-term type of crypto investment. Some other cryptos are longer term. Like, for example, Ethereum, it's making a big switch from proof of work to proof of stake. Now that's supposed to happen in the next couple of years. That's not next year, I think, 2022. It's not too far out. But then there are other cryptocurrency projects that are, still multiple years away from maturing. So those may be more vulnerable in a rising rate situation on the long bonds. And it's interesting. Bitcoin has seemed to be doing okay here, even during some of these market pullbacks. So we're living in interesting times right now, Jim. And as Bob Hoy would say, and we really are. And it's not a bad time to be in Canada, looking at the Canadian market.
Ted, thank you so much for chatting with us.
Jim, it's a pleasure to be back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@howstreet.com and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.